Guys, welcome back to the channel, welcome back to a new video. Hope you guys had a great weekend. This is going to be an absolute jam-packed episode. If you like the content, then please do me a favor, like, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment or share this video with your friends who think that's useful. And without further ado, let's start diving in. We are starting off right away with the BTC USD pair on the 1 hour, and we drew this fib last week and we said that we actually went back exactly to the golden pocket, but that was from a local low and not really from a much lower price point. So if we do that, then we can see that we dipped in once here in the weekend, and now we took out the weekend low and now going higher. There are a few scenarios to be made for us to go higher from here. Let's first talk about those scenarios. I'm going to take out this fib retracement just to make it a little bit more clear. First of all is that we have a bullish divergence here on the 1 hour with the momentum wave coming up, and also the money flow in this case is coming up. That actually looks nice for the first time, because a lot of times the money flow lately has not been coming up together with those divergences. Especially when it's here on the 1 hour, that actually looks good, and it looks like also that we have already spent quite some time here in the red, so it would be nice to pump up a little bit to maybe clear some of those higher levels. On the 4 hour quickly, not that pretty, let's be honest. We having here the money flow still coming down, momentum wave going lower, no real signs of reversals yet. On the 12 hour and on the daily, there is some room from the upside here on the indicators. You could say that the money flow is coming up, momentum waves are going higher, so maybe there is some room to the upside. On the daily it looks a little bit ugly, but in general you could say, you know what, maybe this, if it now just turns back up, we have a little bit of a curve in the money flow to the upside. We have this bullish divergence also still playing out, so maybe another move to the upside would be very nice. Something that I sometimes use so now and then is also the indicator from Traders Reality, and that is a free indicator. If you just go here to your indicators and you type in traders, then you already have them here on the top. Traders Reality, that is a free indicator. It has a lot of colors, has a lot of signs, but the basic principle is that you have a red or green vector candle, and those are these candles right here, and I usually use them on a 15-minute or on the hourly, as they are getting recovered, meaning that if you have a fast drop down, other people would also call them single prints, is that at some moment of time they are coming up to recover it and then maybe reverse again. So you can, for example, see it here, we went up and then this candle reversed it here until half. Here you have a red candle is later on being recovered. Here you have one that's being recovered. Here you have one that's being recovered by this one. This one is being recovered by this one, so etc, etc, etc. So it's sometimes very powerful and very nice to use. With that being said, that would mean if we are going back to recover that candle, that will be approximately 3%. Very nice move to the upside. There is another pattern that I kind of quote-unquote just found where I'm looking at. Let me take this out. Because I was thinking, well, where could we go? We talked about a bigger rounding bottom here last week. Now it's getting a little bit ugly here, I have to say, but let's say that this is still a little bit in play. Then you could say, well, then we maybe need to retest those top again. And what do I see here? Actually, since we now already tested this top here multiple times, that is that the price is just very slowly creeping up to the upside, and we're having ourselves of a rising or ascending triangle right here. And then the apex actually will still take quite some time. It will be approximately 17 or 18 of October. That is next week, Monday or Tuesday. So we could see some slow, choppy, sideways, a little bit upwards price action for the next week. So also this scenario would say, you know what, maybe we're going higher. Let's quickly just check the targets. And I always like to be a little bit conservative, you know me by now. Is that if we are breaking to the downside, and of course depending a little bit on where we are going to break out, but let's say we do it somewhere here, then the target is exactly 17,600, the low so far of this bear market. Very interesting. The target to the upside would be 22,500, also the exact top here. So no matter if you are following this pattern or not, and if we are going to break it and reach the target, both targets are super interesting to see if we can reach it or not. But if we are going higher, let's say we're having a fake out, then I'm checking out a fake out from the 20,500 to maybe the 21k, the golden pocket that we still have here also on the macro. So if we reach it and we're having a bearish divergence, I'm definitely trading it as a short, just like I was trading this on the 1 hour as a long because of this bullish divergence. Then we have important news, and that is this week that we have CPI data. So that's the consumer price index, that's the inflation. I will tell you exactly in a minute why that could be a problem. I quickly first want to show you the S&P 500 because this was the first 2 days, and then I already said on Twitter, be careful, this might drop down, and that's exactly what we had. If you just follow me on Twitter, the link is in the description. I update you multiple times a day, and if something changes, then also update you on that change. So I said on the 4th of October, listen, the last 2 days we went up 5.7% in the last 2 trading days. Just to compare it, last week went down 2.9, the week before 4.6, and the entire month of September was a minus 9.3. In other words, in 2 days we recovered half of the loss of September. So it is to be expected that we are going down. Boom, right away we went 3 days in the red, and we almost completely reversed the gain that we have made earlier that week. So sometimes it can just be so easy, and sometimes you just need to zoom out a little bit in a bigger perspective. But you cannot say that I didn't warn you. This drop itself gave actually a nice gap to the upside. Why is that nice? Because usually Bitcoin moves together with the S&P. So if we are going higher to close this gap to approximately 3,750-ish, so we say, that could be a nice move for Bitcoin to the upside to maybe grab some liquidity again before we are going lower. If we are breaking this low that we have right here, that I nailed at $5, I set 35.90, we closed it at 35.85, I believe, and then went back up. If we lose this level again, then I think we are going to retest the 3,280, so that's important. 3,280 for the S&P, but I hope that we have maybe a little bit more room to the upside. One quick sidestep, just fun to show you. I think it was an absolute joke. Ran, the crypto guy, he is famous for deleting so many of his tweets once he finds out that he is wrong, and I once retweeted it because he said a big dump is coming soon. Well, we didn't really have a big dump all the way down to the lows, and said, so we're getting one more pump with a wink. Let's just take a screenshot before he deletes it again. And this morning I was checking my Twitter, and there you go, he deleted the tweet again. Absolutely childish, immature. So please be careful who you are following, who you are listening, because they just turn 180 degrees whenever they need to, whatever they feel is suitable. Of course you can change your bias, but by deleting this stuff, I just think that this is also a huge problem in the crypto space. He is, I think, a problem. I do not trust him at all because of this kind of childish behavior at all. So yeah, that is just something I wanted to say. Okay, then we have CPI data that is coming out on Wednesday. You bet that that's going to cause a volatility. I said earlier today on Twitter, I said I guess the market will do the same as last week. That means 2 days before the news, the volatility is okay. Meh. Then tomorrow the volatility is flat. The markets are waiting for the data, and then on Wednesday the data come out, and then boom, you see everything just spiking up and down. To be honest, guys, 2 times of 2 CPI data ago, I was very bearish. We nailed it. We went down, we went short, and we made a lot of money. The one before, I said, well, the CPI data could be better than expected because oil has been going down. Oil is an important factor in the CPI data, and the inflation also came out a little bit lower, but the core inflation was higher. That is this one, 6.3 compared to 5.9 last time. This one is super important for the Fed. And although I expected inflation to be a little bit better, we again dumped down. I'm going to be honest with you, this time I'm 50-50. Really, we could go either way. I do not see very strong or weak signs that we would lean one way or the other. So I am really saying 50-50. If I'm not in a trade, I'm just letting it go, and then let just first let the news come in, let it sink in, and after that I will most likely put in a trade again. If I do see a nice setup beforehand, or I still keep this long open, we'll see, then I will keep it open, but I do not trade just before the news comes out. So CPI data, very, very important. A lot of people will think that the Fed will keep rising the interest rates with at least 0.25%. Sorry, 0.75, excuse me, 0.75. Why? Last week, the non-farm employment change came out very strong. In other words, there were 263,000 jobs created and they expected 250,000. Also, the unemployment rate even came down, further down, 3.5% compared to 3.7%. Now the markets, in other words, the labor market is strong and robust, as the Fed is always telling it. That will be fuel for them to say, okay, you know what, we can keep rising the interest rates at least with 0.75. But let's say that the inflation now also comes out very strong. They will say, okay, we will definitely rise the interest rates with 0.75. Even let's say it's higher again, the core inflation, maybe they will even do 1%. And then it's going to be a very, very bloody day on Wednesday when the data comes out. So if the inflation is higher than this again, the core inflation is higher than 6.3, you betcha that we have a very bloody market, because then we have two strong signals for the Fed to keep rising the interest rates: low unemployment, strong labor market, and a high inflation. But if the core inflation suddenly is much lower than 6.3, so let's say we go to somewhere to 6, they'll say, well, then I don't know. Then we have two numbers that are kind of conflicting. We have the inflation coming down, but the employment staying strong. So then I would say yes, 0.75 is still in the cards. But if there's more data coming out in the next couple of weeks, maybe they will go to 0.5%. But again, like I said, if it is at or around this number or higher, you betcha 0.75 is a guarantee, and maybe even 1%. But we'll see what that is. Okay, then of course the dollar index, we can't miss that. I drew this a little bit of a rising wedge here. Usually it will break down to the downside and retest those lows. That actually would be nice. The indicator on the bottom is telling the exact same story. That is that the momentum wave is already going down. It looks like that the money flow wants to roll over. But we have seen that this indicator and then the dollar index has been cheating on us so many times. That every time I thought, well, now we need to breathe, now we need to come down a little bit, and then again we just pumped up. This was a very strong and unexpected pump last week. So this is right now where I'm looking at. Also for the dollar index, we are at the golden pocket, measured from this top right here to the bottom, all the way here back to the top. Golden pocket 113. And if you have been following me on the channel, then you know that my macro target is between 112 and 120, and that was also the absolute top from years ago, right here where I drew the box. Let me zoom that out a little bit, like here. That was beginning kind of off the top formation until the actual real top. I do not expect us to breach that anytime soon, but that is kind of where I see maybe the dollar index topping out a little bit. And as you can see, we're also absolutely just going parabolic. So this sooner or later will break. I think that's also what the Fed wants, that the dollar breaks. And then stocks can slowly go up again, and we see money flowing out of the dollar into stocks and commodities and maybe also Bitcoin. But we're not there yet. Day by day, level by level, trade by trade, as I always tell you. Okay, quick summary. So what can we expect? It would be nice if we are going maybe a little bit higher, recover some of these levels. If we are taking liquidity 20,500 or 21k with the right bearish signs, I will definitely trade it. Let's say we are somewhere in the middle on Wednesday and then the news is bad. Pack your bags, it's not going to happen. Then this is out. This is out, and we are definitely going to reverse. I do not see it after that a quick recovery up. Okay, so keep that in mind. This is a news-driven, sentimental market. If this news comes out when the price is somewhere hanging here at let's say 20,000 or 20,200, 300, and not even really until this top, we are dumping down. It is pack your bags. We will not see the tops anymore. You know me on the macro, I'm still very bearish. I do think at some point sooner or later we need to take out that 17,600 or at least retest it. And the CPI data might just do it. I really don't hope so, but that will be nice. If the data, let's say, is much better than expected, Then we of course can see the other way around. Then we could see a major pump up. Then actually I think that this 20,500 will not hold if we are somewhere here on Tuesday. I think we are definitely then going to the golden pocket and maybe even higher. That would be actually very, very nice. Then we actually also have a premature breakout of this pattern. With that being said, if we have a premature breakout and let's say it's a quote-unquote fake out, then you're usually going back. If we do not retest it and going higher, then I see us going back in here and eventually drop down, and then it's lights out and it's over. Yeah, so just want to prepare you for all scenarios. This is right now what I'm looking at. I am staying cautious on the macro for this quarter. I am still negative. I would like us for now to go higher so that we can grab the liquidity and screw those moon boys over. That would be super, super nice. But we also have to take into account that there are just news factors, days that everyone is looking at, and that we see the volatility going up and down during and before and after those days. That is important, and I'm trying to take you by the hand and walk you through the entire scenario from BTC and the S&P and the dollar and the news, yada yada yada. With that being said, if you like these kinds of updates, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. See you guys very soon again in the next one. Bye bye.